Welcome back to another video in the journey to $1 million in funding. And in this quick video, we're going to be covering the risk management strategy that I like to use when I'm trading these prop firm accounts, whether it's the evaluation or the actual funded account itself. And to be honest, it's a very simple strategy. It's essentially, if you take a loss, you want to reduce your position size by 50%. Anytime you take a loss, you want to reduce your position size by 50%. And then once you mitigate the loss, you can kind of go back on top again. But now, one thing we have to consider is trading with Apex, Top Step, any futures prop firms, you're very limited on the drawdown. You only have a couple percent to work with. Whereas if you're trading with the Forex prop firms, sometimes you have 8, 10, 12% drawdown that you can go into. And that's extremely beneficial if you're on a losing streak, which is inevitable as a trader. So when it comes to trading these futures prop firms, you want to be very conservative on the way that you're actually trading. And personally, I only trade the 50K accounts, so I don't ever risk more than $500 per trade. And like I said, if I'm risking $500 and I take a full stop out, I'm immediately reducing my contract size. So if I'm trading one mini, then I'll reduce it to 5 micros, which will be 50%. And then if I take another loss, I'll reduce it even further to 2 micros. If I take another loss, it'll be 1 micro, right? We have to consider that our drawdown is very limited when we're trading these futures prop firms. So if we dive into the screen really quickly, we can take a look at ATF. So this is Apex Trader Funding. You can see that they have a bunch of different accounts here. But for example, if you're looking at a 50K account, you only have $3,000 that you're aiming for in terms of your profit, but you have $2,500 worth of trailing threshold for your drawdown. 100K account, you only have $500 more for $3,000, but your profit target is $6,000. That's one of the main reasons I like the 50K accounts, is because you have essentially the same amount of drawdown as your profit target to work with, which is basically like a 1R. But if you're trading 100K, then you have to make a 2R, which is $3,000 risk, $6,000 profit. So when it comes to trading these accounts, you have to be really conservative, because you can go on a losing streak of 4 to 5 trades using one mini and then completely blow the account. So you really want to focus on reducing your contract size anytime that you take a loss, and not allow yourself to go on tilt or get to a point to where you're affected by that loss and then go down a spiral, and then you start losing multiple trades and maybe even lose the account in one day. Most of your losing days, if they're controlled, are irrelevant. But if you have a streak in one day, it could wipe away months, weeks, days worth of progress. So you really want to be conservative with how you're trading. And if you do take a loss, always reduce your position size by at least 50%. Now, if we take a look at Top Step as well, similar type of concept. You have $2,000 maximum loss limit with them. It is a trailing daily threshold type of thing, how it works. So one of the main benefits though with trading Top Step is they will actually shut you off if you've lost $1,000 in a day on the 50K account, for example. So that prevents you from going on tilt or spiraling out of control and then just blowing all of it and then losing the account. And the good thing about having this, it gives you a little bit more of room, I would say, because if you build a bit of a buffer, then like, let's say you're trading in the morning session, you maybe make $400, and then you go back in the PM session, you actually have $2,400 drawdown to work with, because you've added $400 in the morning, and it's not like Apex where it's trailing against you. So that's a huge benefit when it comes to trading Top Step. And if you're trading these accounts right, and for example, you do go on a winning streak, like with my Top Step accounts, for example, I went on a winning streak of 10 days, 100% win rate. I had losing trades, but I always ended the day in profit. So I was averaging between $300 to $500 per day. And then these accounts were passed and funded within 10 days. So if you go on a winning streak, it doesn't take a long time to get funded. But if and when the inevitable losing streak comes, you have to be very disciplined in the sense of cutting your risk in half every time that you take a loss. And if we just dive into like some quick math, you can take a look here. If we have a $50,000 account, and let's say we're using Apex as an example, we have $2,500 worth of trailing drawdown, right? Which means if we're in an open position and we go up $500 and that account and that trade comes back to break even, that is deducting $500 from your drawdown with Apex. Top Step does not work that way, so it is a bit easier in the sense of like you have a little bit more room. But Apex, as long as you're not over leveraging and you're using proper size, it's totally fine. Like I'm never bothered by the trailing drawdown because I'm using proper size. So if you're not over leveraging, you don't really have to worry about this anyway. Now, when it comes to trading these accounts, like I mentioned, if I'm at $50,000 or above in profit any amount, I'm allowed to use one mini contract, right? So I'm typically risking between $400 to $500 a trade. And this is anywhere between 20 to 25 handles, right? Still a little bit tight on NASDAQ, but I don't want to risk more than that. Most of the time, I go ahead and cut the trade off early if it hasn't panned out or it's taken too long or it starts running towards my stop. And that's just a good practice for trade management to make sure that you cut losses early and let winners run and obviously close partials, right? So if we're risking $400 to $500 per trade, we only have about 4 to 5 trades until we hit the actual $2,500 in drawdown. And that's not a lot, right? So obviously this can go the opposite way and you could just have a streak of winning days and you can pass the accounts. But obviously you're going to have some losing days in there. So when those losing days come, you want to make sure that you're being very disciplined in the sense where you're not continuing to risk $400, $500 per trade. Cut risk in half and risk $200 to $250 per trade, right? And then if you take another loss, you would cut risk in half again. And then at that point, you're risking between $100 and $125. And then it just keeps going on, right? So you cut it as low as you possibly can, the more losses that you take. Now you're allowed to increase your position size back up again once you get back to whatever that initial balance was. So let's say we're at 50,500. We go on a streak of losses. Now we're down to like 50,100. Well, until we make that $400 difference back, we can't use our normal size. So I would, in this case, I would consider and continue trading MNQ, which would be the micros, until I get to a point and position where I'm allowed to trade the minis again. Okay. So I know this was a pretty simple video on risk management. Obviously, if you guys want me to create a more in-depth video on risk management strategy for personal accounts, Forex funded accounts, futures prop accounts, more in detail than this, obviously drop that in the comments below. I can create a more in-depth video on that as well. But this is just a very simple approach. I don't think you need anything more than this, as long as you follow the philosophy of if I take a loss, I reduce my position size by 50% until I get back to my initial balance. Like that's really all you need. So you don't really need to overcomplicate your risk management strategy. So if you guys found value in this video, drop a like, drop a subscribe, and drop a comment below. So I'll see you guys in the next one.